Thanks for coming back. Today I'm going to teach you how to profit from inflation. If you didn't see the last video that explains what inflation is, click the link, check that out, and then come back and we'll go through how you actually make money from inflation. Now that you know what inflation is, I want to show you how to make money from it. The first way would be by leveraging 30-year fixed debt into a property that you purchase, right? So let's say you purchase a property, a rental property, and you get a 30-year fixed loan. You buy yourself a little property and you get a loan, 30-year fixed, which means that it's going to stay the same for 30 years. Here's year one, here's year 30. Let's say it's $1,000, right? $1,000 a month payment for 30 years. Now you've got interest on top of that. So that's one thing to pay attention to. Your inflation needs to outpace the interest on your loan. And in that case, you'll make money. Okay, so here's how. As inflation rises, that means prices of everything's going up, and so are incomes, right? So prices of houses are continue to rise, prices of groceries, everything else is continuing to go up, but so is your income. So you can still buy the same amount of goods with your income, even though you make more. But the one thing that's not going up is your debt, your monthly payment, right? Since it's a 30-year fix. So here's your income over that same 30 years, which is going up. So you're making more money. Now, it doesn't necessarily mean you can buy more, except it does make your payment cheap compared to your income. See, in year one, the gap between your payment and your income was pretty narrow, might have been steep, a little bit difficult to handle maybe. And as the years go by, the difference between your income and your payment gets bigger and bigger and bigger. So 30 years from now, or even 15 years from now, $1,000 a month payment that was difficult in year one, maybe small beans in year 15 or 20 or 30, right? So that's one way that you can make money off of inflation. It allows you to pay for this really expensive house today with future money. So that's how that works. It allows you to finance a really expensive house today and then not pay it off, not pay for it completely for all this time, right? You're paying some of it incrementally, but as your incomes go up, it makes it cheaper in a sense, cheaper. So you locked the house in at the price today, you paid for it in the future, you get to benefit from that big gap between your income and your debt. However, there's two big things you need to pay attention to. I already mentioned one, the interest rate on your loan, as well as the rate of inflation. So as long as inflation outpaces the interest rate on your loan, you're making money. However, you need to do the math, right? If inflation stays consistent, so let's just say your income's not actually rising much from inflation, it's just right here, right? Well, now the gap doesn't widen. It never gets easy to handle. You're not actually making a whole lot more money due to inflation. You may make more money with raises or things like that, new jobs, business ownership, things like that. That's a different thing. I'm talking about incomes rising with inflation, okay? So that's a big thing. And if the interest on your 30-year fixed loan is too high, you're going to pay multiple times that house's value over time. So that's another way you lose money. So in today's market, this is partly what's driving this pandemonium in the housing market, is that interest rates on 30-year fixed loans are below 3%. I mean, they're so cheap that inflation is going to keep up with it or even far outpace it. That's why some people are betting on inflation and overpaying for houses and thinking like, hey, it feels like I'm overpaying now. I may be overpaying what seems like $50,000 or $100,000 for this house, but in the next couple of years, we're set to experience some hyperinflation. It might even hit, really large numbers. We're really accustomed to an average of like 2 to 3%. But what if it's at 10%, 15% over the next few years? Well, then this is a very realistic view of what may happen, right? So people are overpaying for houses because 30-year fixed loans are cheap and inflation may go into hyperdrive. So that's what's going on right now. Now, here's a second way to take advantage of inflation through purchasing real estate. Okay, so let's say you have $50,000 to invest. Okay, so let's say you have $50,000 to invest. You can invest in stocks or you can invest in real estate, whatever. You could hold it cash. If you hold it cash and inflation continues to go up, that means prices of housing, groceries, etc. is going up. That basically means this $50,000 is getting worth less. It can purchase less tomorrow than it could today, right? At the end of this year, it can buy less than it can at the beginning of this year. So you don't want to leave it cash if we're going to experience inflation. You want to put it into something that can adjust for inflation. So that's why a lot of people hedge their bets with gold or something like that, because if gold holds its value in theory, and cash becomes worth less, gold will go up. So here's something interesting about real estate. Because I can use a 30-year fixed loan, I can buy a $250,000 house with only $50,000 down, right? That's 20%. So if I put 20% down, that's $50,000. Now I own a $250,000 property, or at least I will own it one day. Inflation continues to rise. That means these housing prices are going up. So let's say this house goes up 10% because of inflation. Well, now I get a 10% increase on the total equity of the home, not just the amount of equity I put in. So a 10% increase means I make $25,000. Another way to think of this is if I put that $50,000 into something without a 30-year fixed loan, I just put it in, invest this with no debt, and I get a 10% return. That's only $5,000. Because inflation is rising, let's say I put this into a business or gold or something that had the ability to adjust for inflation as well. I get the 10% increase, I only make $5,000, but because I can leverage debt, inflation actually works in my favor. Okay, so now that you own this property and you're making money off of inflation, and if you think back to the first example where we had our debt staying consistent and our incomes rising, well, we also have the value of the property rising. So what happens when the value of properties rise? Rental payments rise. Assuming this is a rental property and not a primary residence, you're also going to have tenants in there paying for the mortgage, right? Now, if prices of properties go up, that's part of inflation. Goods, services, housing, rental, everything's going up. That means your tenants are going to have to pay more money over time. So let's just say in year one, this gap between your mortgage, which remember was $1,000, and your rent, maybe it's only $1,100. So you're only making $100 a month, and of course, if it's a rental property, you may have damages, you might have empty months, things like that. So that's really not a profitable rental property at the moment, right? Maybe a little bit. But because the rent is paying for the mortgage, you're getting free increase here. But over time, rent rises with the cost of living. So at some point, this might be $1,500 or $2,000 while the mortgage stays the same. So that's another way that you can make money off of inflation, because you were able to lock in a property here, the rental was here. As rising costs go up, mortgages stay the same. You're making money off the increase of the value of the home. You're making more and more money off of the rental agreement income in relation to the amount you owe. So that's the third way that you can make money off of inflation, particularly in real estate. Now, some of these principles apply to stocks, right? You hear Warren Buffett talk about he likes businesses more than like gold, for example, because they can adjust for inflation, they can adjust to economic conditions, things like that. So you all know, if you've watched this channel for very long, I'm a big fan of the stock market. I've been playing in the stock market for years and years and years, a couple of decades, and I've experienced a lot of various things, different markets, different trends, things like that. Now, if you've paid attention to the stock market lately, it's also skyrocketed, right? I mean, the chart, the chart since COVID, there was this dip in COVID, and then it's just gone like that. And it's the craziest stock market boom in history. It's gone nuts. And a lot of that is also associated with the interest rate. So the interest rate drives a lot in real estate. It also drives a lot in the stock market. And both of these have the ability to adjust for inflation. The thing about stocks is you don't typically just get a 30-year fixed loan to buy stocks. That's more of a trick, right? So that's where inflation makes a lot of sense in real estate. I hope this helped with understanding how to profit from inflation. If you found any value from this, hit the like, subscribe. It's the easiest way to support the channel, help a wannabe YouTuber get out there a bit, and we'll see you guys on the next video.